Good morning, friends. Welcome to Adda 24/7. Today's discussion is central banking, and we are discussing module F of central banking. Okay, up till now we have discussed up to module E, all the details. Every Thursday we have discussed the same at 9:30. So today is the last part of our portion discussion. Okay, from next Thursday we'll be directly starting the topic as such. Okay, so let's start without wasting the time. Okay, so the portion for here module F, what we are focusing on is, see this, I'll just bring on this portion over here. Hold on one sec. Yes. Hold on. Uh, yeah, this one. See this. One sec. Let me change my image over here. Hold on. Let me bring it down. Yeah. So this, we'll be discussing module F now. Module F is strictly about NBFCs and primary dealers. Okay. What is NBFC? Non-banking financial corporate companies. Okay. Now important part about NBFC is, earlier many of us thought that RBI is the regulator for only banks. But with the advent of NBFCs, do you know, how many of you know or can tell me now the percentage of loans disbursed by NBFCs as compared to that of the banks? Do you know how much percentage NBFCs disburse the loan as compared to that of the banks? It is more than the banks. Remember, it is more than the banks. The amount which banks disburse, NBFCs disburse more than the banks. Okay, so that's why there is a huge importance of NBFCs now. NBFCs do not only mean those NBFCs which you see in your daily life, Muthoot Finance or this Manappuram or this Bajaj Finance, Bajaj Finserv. Okay, Bajaj Finance is also an NBFC. Okay, but these are not the only NBFCs we are talking of. There are many NBFCs which are online also. There are online dealers, online lenders we call them. They are not there like these normal NBFCs which we see. They have a branch, something. No, nothing, no branches. So even RBI controls them also. So that's why this topic is very important, because I'll tell you, they are giving a tough competition to the banking system. So non-banking finance companies and primary dealers. Who are the primary dealers? Primary dealers are mainly banks. Okay. Here there are primary and secondary dealers always in all the markets. So mainly in forex market they deal in, but primary dealers, and also in government bonds also primary dealers are there. Primary dealers mean basically what? They can deal in all the types of securities. Okay, these are mainly banks. Okay, so let's discuss this NBFC and primary dealers in details. So what is the portion for this NBFC? See here, the portion over here is development, regulation and supervision. Understand the importance. It is development, then regulation also and supervision also. All the three parts are covered over here. Because RBI has to develop this also. See here, it's not that RBI will always give a step-brother treatment to NBFCs. No, they are also important to the economy. Okay, so development of theirs is very important. Regulation means they have to be controlled. Otherwise what happens, see here, there are many chit funds also in the market and many private lenders also in the market. Many private NBFCs who are not registered with RBI, and then we have all those scams, big scams we have, right? So they all act as NBFCs, but they are not registered with RBI. So that's why these scams happen. So that's why regulation is very important for such rogue elements. Okay, supervision. So supervision comes over here. Regulation and supervision come hand in hand. Okay. So conditions for companies to register as NBFCs. What are the conditions? Why? How can a company register as an NBFC? That will be studied over here with Reserve Bank of India. NBFC is registered with other regulatory bodies. So which are the NBFCs which are registered with other regulatory bodies? Other regulatory bodies means what? There are various regulatory bodies. For example, MCA, Ministry of Corporate Affairs. So NBFC can be registered with them also as a company, isn't it? Some NBFC can be trust also. So that can be registered with the trust. Okay. So classification of NBFCs under broad categories. Classification means what? Whether it's a deposit taking, whether it's only lending, whether it's deposit taking and lending both. Okay, so there are various classifications. There are separate rules for deposit taking NBFC and non-deposit taking NBFC. Okay, there are almost 4 to 5 classifications. We have studied that in your daily classes. Okay, growth of NBFC sector means how can the NBFC sector grow, because that is very important. Here, wherever banks can't reach in very small villages, NBFCs do reach there. Okay, so that's why their growth is very important, but with supervision and regulation. Okay, the need for prudence. What do you mean by prudence? Prudence means the correct form of lending and correct form of deposit taking. If any NBFC takes deposits and lends haphazardly, then the depositor's money is at stake. Okay. The role of Reserve Bank of India in development of NBFCs. Okay, means basically what is the role of RBI? Importantly, remember NBFCs are not required to keep CRR and SLR up till now. Okay, so that's why they are always at risk. Why are banks at lesser risk? Because they have SLR. Okay, but the CRAR as per the Basel norms of NBFCs is higher than that of the banks. So that's why that way NBFCs are safer. Okay, regulatory policies of NBFCs. Okay, means what? Regulatory, what are the regulations which keep the NBFCs on track? How does the RBI keep these NBFCs on track? What are the policies? Okay, scale based regulatory framework. Okay, scale based means what? Scale based means what is the level of each NBFC, and based on that it has to be given the regulations. Special liquidity scheme SLS for non-bank finance companies and housing finance companies. So these special liquidity schemes do exist for NBFCs, and even these housing finance companies are basically NBFCs only. Okay, they work as NBFCs only. So special liquidity schemes for these NBFCs. Aligning regulatory framework for HFCs with NBFCs. Here, why have they given separate HFC than NBFC? Because here, housing finance companies, like which are these housing finance companies? Okay, let me give you 1 or 2 examples. For example, this India Bulls Housing Finance. Okay, we have HDFC Housing Finance. We have ICICI Housing Finance also separately. I think so that is merged now. That is merged with ICICI Bank. But HDFC Housing Finance we have that is going to be merged, but still we have that only. Then there was one Diwan Housing Finance, that all scam happened. Okay, so that's why, see this Diwan Housing Finance, it was the biggest scam, right? So that's why what happened, from that RBI learned a lot of things, and because of that these regulations have come up for all these housing finance companies. Okay, because what happens, housing finance companies play a major role in the economy. They give the loans, but they take the deposits also in form of CDs, certificate of deposits. Okay, so aligning regulatory framework for HFCs and with NBFCs. See, this is very important. Mean these HFCs need to be given the similar treatment of NBFCs. Lowering of secured debt for NBFCs under SURFACE Act. Here, lowering of secured debt means what? Earlier what used to happen, the regulations for NBFCs were very strict, so it was very difficult for them to function. So that's why under SURFACE Act what has happened, they have got the advantage. Now SURFACE Act is not only applicable to banks, it is applicable to NBFCs also. Even to mobile companies, postpaid mobile companies, SURFACE Act is applicable. Okay, if you want to check, just don't pay your postpaid mobile bill for 2 months and see what happens. You will get a notice under SURFACE Act. Okay, declaration of dividends by NBFCs. So how can the NBFC declare any dividend? What are the rules and regulations? Like for banks we have what? Minimum 3 years the CRAR should be more than 9% for banks. Then what are the policies for NBFCs? That we'll study over here. Supervisory policies of NBFCs means how to supervise these NBFCs. What are the differences in supervising while supervising with the bank versus supervising the RBI and this NBFC? Appointment of auditors in regulated environment means how the auditors are appointed in NBFCs. What are the regulations for that? How does RBI keep the track of that? Prompt corrective action framework for NBFCs. PACA is very important in banks also and NBFCs also. Prompt corrective action means if any bank or NBFC is going in the wrong direction, immediately how to bring it on the track. That is called as PCA. Okay, many banks have gone under PCA. Okay. Impact of pandemic on NBFC sector, because what has happened due to that COVID on this NBFC sector, because they also faced a lot of problem in due to that pandemic. Okay, many of them faced the problems. So same thing happened with the banks also and NBFCs also. So importantly, if you focus on NBFCs more importantly, see here what has happened is many of the NBFCs are now as good as banks. Like for example, Bajaj Finance. Bajaj Finance is bigger than many of the banks even. Okay, it's so big. So like that, I'm just giving one example. There are many examples as such. So the point over here is, if such big companies of NBFCs, they have some problem, if tomorrow they have some, then the whole economy is in a problem. So that's why RBI has to see to it that these big NBFCs, or which are the major players in the market, these need to be stabilized. These need to be regulated properly so that they can function well as they can bring the economy on track. I'll tell you why these NBFCs are growing so much. Because we as the banks are not able to grow that fast. Means what? You go in any shop for your refrigerator, buying any white good, refrigerator, television, you will find one Bajaj Finance guy sitting over there. Can we place our person from the banking staff over there? Not possible. Because it is possible, but banks have to gear up a lot. Okay, there are lots of regulations to the banks, and also the staff is limited. That is also a point. So I gave you this example of Bajaj Finance. Okay, for many others also. For tractor finance, we have various other tractor finance companies which are not there. Bajaj Finance is in personal and consumer loans. Tractor finance, we have all those Sundaram and other finance companies, right? Even these L&T has come up into this tractor finance. So these all are NBFCs. So that's why the role of RBI is very important in governing these NBFCs, regulating them and supervising them. Okay. Role of primary dealers in government securities market. Now, primary dealers means, as I told you, there are two types of dealers, primary and secondary. Secondary dealers means those are a bit lesser, at least in Forex we know, we study that those have a bit lesser limitations. They have certain limitations with reference to the primary dealers. So what are the roles of these primary dealers in the government security markets? Their development, their regulation and supervision. Again here, RBI has always to focus on these three roles. One is development, second is regulation, third is supervision for all of them. What is the evolution of PDs? How did these primary dealers evolve? What are the reasons for which these primary dealers came in this government securities market? See here, government securities market is a huge market. Okay, it is bigger than the normal market of which we deal in. Stock market is quite smaller as compared to that of the government securities market. Eligibility conditions for the primary dealers means on what basis are these primary dealers appointed? Role and responsibilities of these PDs, primary dealers. Okay, means what are their roles and responsibilities? What do they do actually? How do they help the government securities market? Because see, this government securities market, how does this function actually? See here, RBI issues these government securities. See here, I'll give you a simple example. If government wants to build a highway from Kashmir to Kanyakumari, let's say, okay, we are now going on all that highway spur, right? Everyone is going on for, government is building huge highways, but where is it getting the money from? This money, what does the government do? There's a company called as NHAI. Government will tell RBI that issue NHAI bonds. This NHAI is backed by government. So NHAI bonds are issued. These bonds, when issued by RBI, these are purchased by whom? These are purchased by these primary dealers, and these primary dealers then further sell it to in the secondary market whoever wants it, right? So that is the role of these primary dealers. So that's why primary dealers are very important from the government securities market, and that's why the roles and responsibilities of PDs, primary dealers, is very important. Liquidity support from RBI. How does RBI support these primary dealers? Because after all, see here, these primary dealers are also organizations. They'll need some money. So how does RBI support them? Does RBI provide lending to them? Loans through the banking system? So that is checked over here. Operations and performance of primary dealers. How do these operate? What are their performance ratios? What are their performance figures? What is the level of performance they have achieved up till now? Financial performance of SPDs. Okay, yeah. So financial performance of these SPDs, then operational guidelines and regulatory supervisory provisions governing primary dealers. So operational guidelines, regulatory and supervisory provisions. So how these are to be regulated and supervised? Investment guidelines, capital adequacy and risk management. So CRAR ratio for these, what are the CRARs maintained over there for these primary dealers? These will be studied. So that's why module F is mainly dealing about NBFCs here. Although the portion is so big, you won't get so many questions in exam for this. That's why what do? At Adda 24/7 we pick up the important parts which can be asked in the exam, and only that is given to you. Otherwise what happens, if you go on studying each and everything, you'll forget the main parts which can be asked in exam. Okay, so how do we do that? See, for doing this, what do is we have classes, batches over here. Look at the batches. What are the batches? Now let me show you. Hold on. Yeah, one second. Let me show you directly live on Adda 24/7. Let's go to Adda 24/7 live over here. Okay, yeah, one second. Yeah, see here, for this you can join the batches. In the batches, what you will see this, click on JIB and CIB. Once you click on JIB and CIB, you'll see this CIB 23. Click on CIB 23. Here you will get the you'll see the batches. See this batch, English batch. Click on that. In this batch, you will see the details. Details means what are the dates, timings, all the 4 subjects, compulsory ones, ABM, BFM, ABFM, BRBL, and also the electives. We take the electives also. Recorded videos are given for those electives because the timing is not sufficient. But it covers full portion, including all these numericals, objective questions, whichever are there. Okay. So 4 subject, all the 4 compulsory and 1 elective. Then what are the dates, what are the timings, then ebooks are available, then recorded videos of 24/7 are available, so that what happens, if you miss out on any class, you can get back to those at any time. 2 interactive classes are available. Okay, now let's look at the fees. See, this fees is 23,999. Now look at this. The point over here is, click on view offers, put the code Y432. Never forget this code Y432. Click on apply. Look at this, 80% off you are getting. 4799 is the discounted price, means 23,999 reduces to 4799. Such is a huge discount you guys are getting. It's an investment for lifetime. Go for it. Also, I would suggest you can go for the Mahapack. What is the Mahapack? 15 plus batches for JIB and CIB. Means if you are in CIB, you'll get 15 plus batches for CIB. How to get to it? See this. Go to JIB and CIB again. Click on the front page. Click on JIB CIB Mahapack. Click on CIB ka Mahapack. See this, CIB ka Mahapack. Once you click on this, you will see the details. Look at the details. All the means 15 plus batches for this full CIB, ABM, BFM, ABFM, BRBL. 15 plus batches. Even if you do a single batch, means every subject, if you do just one batch once, then also you'll learn the topic. Okay. Now, recorded videos obviously are available for all of them. Then let me come to the fees part directly, because remaining things you already know. Recorded videos, then ebooks are available, 2 interactive, you already know. Click on view offers, put the code Y432. Now click on apply. Look at this. The validity is 12 months and the amount is what, 35,996 for the fees. Now it becomes 7199. 80% off, that also for 12 months. Then 7,199 for 12 months. It's less than the tea expenses for a daily basis, on a daily basis, less than 20 rupees per day. Okay, and it's an investment for lifetime. Once you clear this CAIIB, you'll recover this amount in hardly what, 7-8 months, isn't it? So go for these batches immediately. Okay, why am I saying this? Because the portion for CAIIB has changed. Now we have 4 compulsory subjects: ABM, BFM, ABFM and BRBL. Okay, also the electives, you don't have retail elective now. Earlier you had retail, now it's totally different. All are specializations, isn't it? So those are difficult ones. Negative marking has been removed, so that's a good sign for you. So that's why I would suggest join the batches ASAP. Okay, so I'll stop over here. Next Thursday we'll start with the topic. Okay, chalo, bye from my side.